Good evening and welcome to the Money Show. I'm Kavita Khablial and this show is the one that puts your money matters front and center in a world full of financial noise. We are here to bring you clarity, confidence, control over your personal finances. Whether you're planning for retirement, building a portfolio, navigating debt, or just trying to make smarter money decisions, this is your space, your guide, and your weekly check-in with your wallet. Every evening, we bring you insights from top financial experts, decode the latest trends, answer your burning questions on saving, investing, spending, and everything in between. Because here on the Money Show, we believe one thing: you don't have to be a finance expert to take charge of your money. You just need the right advice. And just in case you want to send across any question, you want help from our experts on any of your investment strategy or financial goal, write us your questions. You can WhatsApp us your queries on our WhatsApp number that's flashing on the screen. You can also send across your questions on our email ID. Just give us your existing investment details and our experts will help you align your investments with all your financial goals. And to answer your viewer queries today, I'm joined by Pankaj Matpal, who will be dissecting your portfolio and navigating you on the right path. Thank you so much. Good evening, Pankaj, and welcome to the Money Show. And let's begin with Vijay Pratap's question. And he has sent across his portfolio. His investment portfolio has Nippon India Multi Cap, Invesco India Small Cap, SBI Contra. Target is 1 CR. He plans to stay invested for almost 15 years. He's currently 40 years old. Portfolio value is almost around a few lakhs, that's what he says, and he wants to know what will be his portfolio value in next 15 years. So yeah, that's we don't have any other detail apart from that as to what's the purpose of this portfolio. And I don't know if it's a retirement based requirement, because looking at the age, 15 more years he wants to stay put in his investment. So it can be possible that it's a retirement portfolio, but still we don't have any clarity on that. All right, so how will you help him and what's the recommendation for him?
Good evening, Kavita. Thank you very much for having me on the show. See, 1 crore in 15 years, that may be possible if he steps up his investment by 10% every year. Because when I calculated 12% CAGR with 12,000 rupees SIP and the amount of 1 lakh what he has accumulated by now, he can expect around 63 lakh rupees in 15 years. So as I mentioned, if he just step up by 10% every year, he can achieve his target. But second most important thing is that 1 crore, that number can be achieved, but after 15 years, the value of 1 crore will not remain 1 crore. It will be something like half of that. So that is why at least 10% step up is recommended. Along with this, whenever he has money, he should try to top up his investment. All the schemes in the portfolio are good, but he has limited exposure to mid cap, because he has one multi-cap fund. Through that fund, he is getting exposure to mid-cap. But considering that he has a long investment horizon, my recommendation would be that he should add Motilal Oswal mid-cap fund to his portfolio, and all other existing funds are good. He should continue with them.
How would you advise him to review his financial goal if it's a retirement purpose that he's looking out for from this portfolio? What exactly should he be factoring or considering now?
Yeah. See, first thing is target, because if it's a retirement goal, so 1 crore may not be sufficient after 15 years. It becomes more important that he should revise his target. That is one thing. Second thing, schemes are good, so he doesn't need to be worried. But as I mentioned, that mid-cap exposure is limited. So he should increase that exposure to mid-cap. Otherwise, he has small cap also in his portfolio. He has a multi-cap fund and one contra fund. So allocation is good at this moment. And because the horizon is 15 years, so first 10 years, he should stick to this kind of exposure. Later, once he is close to his retirement, if it is retirement goal, or otherwise also, whatever the goal, when he is close to his goal, that time he should try to switch from equity to hybrid and debt systematically to mitigate the risk of volatility in his portfolio.
All right, very important. Let's move on and let's take Deepu Singh's question. He's from Kolkata, 37 years old, and he's got Parag Parikh Flexi Cap, Nippon India Large Cap, ICICI Pru Large and Mid Cap, Motilal Oswal Mid Cap Fund, HDFC Mid Cap, Bandhan Small Cap, and he started investing from August this year itself, and he plans to stay invested for 15 years. He wants you to check his portfolio, and yeah, that's all in terms of investment details. But in terms of planning, I have no idea for what goal he wants to accumulate, how much amount of money. So, so if he keeps investing this amount in these funds, how much is he likely to accumulate?
Kavita, Deepu Singh is new to the investment, it looks like. So schemes are good, allocation is also good. But one thing Deepu Singh has to keep in mind that all the schemes are equity schemes and he has exposure to mid cap as well as small cap. So volatility can be expected in the portfolio. He has to have patience. And because generally investors say that they have 15-year, 20-year horizon, but whenever we see that markets are volatile, they feel uncomfortable with the portfolio. So only advise that he should stick to his goal. Otherwise, schemes are good, allocation is very good. How much he can expect? Again, calculating at 12% CAGR with 7,000 rupees per month in 15 years, he can expect around 33 lakhs. But if he steps up by 10% every year, then the same time period, means 15 years, he can expect around 58 lakhs from his investment. So 58 lakh, we can easily expect if he increases his SIP by 10% every year. But whenever the money is available, because 15 years is a long period, and we expect that he will have many opportunities to increase his investment. So he should set a target that how much he wants to accumulate, and accordingly, he should try to increase his investment from time to time.
All right, very important to step it up and define your investments more, maybe, Deepu. That's the solution coming in for you. But let's take Mayuresh Kadam's question, and he's 25 years old. Total SIP that he's doing right now is of 12,000. Portfolio value is almost 4 lakhs in 6 funds. So he's got HDFC Flexi Cap, Motilal Oswal Large and Mid Cap, Nippon India Mid Cap, Tata Small Cap, Union Multi Cap, and Templeton, Franklin Templeton India Value Fund he has added in his portfolio. He will be doing a step up of 10% whenever he can. He wants to know if there are any changes in the fund mix that you might want to recommend. And he also wants to do a lump sum. And that is what he says in after 5 to 6 months he can do a lump sum investment. And he also wants to understand if a fund is not performing, how should he be cancelling his SIP, or he should be redeeming the amount. The question that I usually ask, because when we suggest an exit strategy from any fund, how should you be going around it? So that's what even Mayuresh wants to know. All right, so let's take it one by one. Let's talk about the fund mix. And congratulations, Mayuresh, just 25 years old, and thank you so much for sending us your question.
From the existing portfolio, my suggestion that he should replace Templeton India Value Fund with ICICI Prudential Value Fund, considering the consistency in ICICI Prudential Value Fund. So that is one change I'll recommend to him. Otherwise, the rest, all the funds are good. He should continue with these funds. Another question, when one should exit from the existing schemes when they are stopping the future SIP. The concern is here exit load and short-term capital gain tax. So future SIP, definitely he can cancel, he can replace with ICICI Prudential Value Fund, but whatever the amount accumulated, first thing, in the last 1 year, whatever has been accumulated, it may attract exit load as well as short-term capital gain tax. So he should, and we know that long-term capital gain tax, when we calculate, first 1,25,000 rupees in one financial year is exempted. So he'll have to do little bit math, and to the extent that up to 1,25,000 rupees long-term capital gain tax amount, what is coming, that much he can withdraw, and balance he can means leave in the portfolio. Later he can decide about that. So immediately he should not redeem all the units. He should redeem partially, to the extent that long-term capital gain is only up to 1,25,000 rupees. That is what he should do to avoid the tax implication on that. Second thing, how much he can accumulate. See, again, if I consider 12% CAGR, so with this 4 lakh rupees, what he has invested by now, he has accumulated by now 12,000 rupees SIP, 10% step up. he can expect around 1 crore 21 lakh in 15 years. Um, One more advice here, because he wants to invest lump sum amount right now. And his question is that whether it's the right time or no for the lump sum, because we cannot time the market. So my suggestion, in the existing schemes, what he has in his portfolio, he should top up, but not in one go. The good thing is that STP route. So through systematic transfer plan, he can deploy this 4 lakh rupees in the existing scheme in over 4 to 6 months.